Welcome back to ICT Trading Concept, guys. How are you all? So today I'm gonna make the first video about the daily recap. I believe that it's gonna be helpful to all of you guys. So let's try. If it helps you or not, let me know below the comment section. Okay. So I will explain London session entry, New York morning session entry, and finally the New York PM session entry. Over here, I will go for the London session London session entry. Okay. So this blue line is started from 2 a.m. in the morning, and this is the 5 a.m. in the morning. This is the London session. First thing first, you have to look for the sell side and the buy side. What do you see over here? I can see a very clean sell side liquidity. So over here, this low and that low, they're relatively equal lows. So that relatively equal lows, and that is the shallow run. So this is the most obvious sell side liquidity. My bias is bearish here. Okay, so I will go for the sell here. Now, if I would love to go for the sell, why I'm looking for sell? Because there is no buy side liquidity. For that, I need a higher time frame. Fair value gap. So over here, you can see a fair value gap from 15-minute chart. This is the last fair value gap from the 15-minute chart. So I'm going to mark that 15-minute last fair value gap over here. Remember, this is the last fair value gap from 15-minute chart, and I have the sell side liquidity. This is the most obvious sell side liquidity. Now I'm going to 1-minute chart. Here, this is the London session 2 a.m. until 5 p.m. 5 a.m. Here I have that sell side liquidity, that is that 15-minute last fair value gap. At the same time, I would love to mark the 1-minute last fair value gap. So over here, I am going to mark the 1-minute last fair value gap with 2 lines. So this is that 1-minute last fair value gap. And over here. So you can see price came to that 1-minute last fair value gap. First, price came here to that 15-minute last fair value gap. It went through that 15-minute last fair value gap, reached to the 1-minute last fair value gap. Then it broke lower. There was the market structure shift. This is the market structure shift. But price didn't trade that fair value gap. See, this is that fair value gap. The breakaway gap and the entry gap. I always look for the immediate entry. That means 1, 2, 3. 3 candle has to trade that fair value gap beforehand. If it takes more time, I'm not interested to take sell. So you can see later price come here to that fair value gap. I'm not willing to take my sell over there. If price can reach over here, either the entry fair value gap or the breakaway gap within 3 candle, I would push my trade button toward that sell side liquidity. But it takes too long over here, so I didn't push my I don't want to push my button over here. I'm just going step by step. Okay, so here you are not going to do anything. Market came little lower, come back again to that 15-minute last fair value gap one more time. So this is the 15-minute last fair value gap. This time market didn't reach to that 1-minute last fair value gap, but it came to this 15-minute last fair value gap. After reaching here, what time is it? It's 3:53. It's still we are inside the session. Okay, so after coming here, market has taken some liquidity here. You can see all of this liquidity has taken over here. Then market went lower. I got the market structure shift over there. So I'm going to mark that market structure shift over here. So this is the market structure shift. After shifting the market structure, do I have 2 fair value gap? I have 2 fair value gaps. So this is the 1 fair value gap over here, and this is my breakaway gap over here. This is the breakaway gap. What is the rules? You have to take your entry over here to that first fair value gap over here exactly, and your stop loss has to cover that breakaway gap. Now you can see it's a huge stop loss. So from here to here, it's near about 28 handle. So in this type of situation, you can do one more thing. You can mark the 50% of the entry fair value gap. If you ever see this type of huge entry gap, then you can mark the 50% over here. So this is the 50%, and I'm going to remove this one. So this is the 50%, and you can actually push your button from here. Okay, so until here, your stop loss will cover the breakaway gap. So it's 17 handle still, and you will look for that obvious sell side liquidity. So there is your obvious sell side liquidity. In my opinion, that all the setup for the London session. Just from the beginning, what I have done, first I marked the sell side liquidity or the buy side liquidity. There was no buy side liquidity, but I had this sell side, clean sell side liquidity, right? After seeing this, I marked the 15-minute fair value gap. So I will frame my trade from the 15-minute fair value gap. Price come here to the 15-minute fair value gap for the first time. I got my market structure shift over here, but there was not immediate reaction. Price came here to that fair value gap, but it was not immediate reaction. So I don't want to push my bottom over there. It went lower, make relatively equal lows here. You can see this low and that low, they are relatively equal lows. So this kind of sell side liquidity as well. Market just went little more higher one more time. What did it came to the 50-minute last fair value gap? So this is the 50-minute last fair value gap. When price come here, gave me the market structure shift, then that was the immediate reaction. See, after making this fair value gap, the very next candle has traded this fair value gap. But I told you, if you ever see this type of very huge, okay, it's a huge entry fair value gap, you can't wait to reach price to the breakaway gap. You can't wait for that. Best option is to press your button when it trade into the fair value gap. Okay, so over here, that is the best option. But where there is a big gap, you can mark the consequent encroachment and you can push your button to the consequent encroachment. Your stop loss will cover the breakaway gap and you will go for that obvious liquidity. So this is the obvious liquidity. You don't need to hold the trade until here, but if you can see market actually trade until here, then it reverse. So in my opinion, this is the best entry for the London session. And is it really hard to see? I don't think so. The way I actually explaining, you will get that in London AM session and London PM session as well. Okay? So that was the entry from London session. I'm gonna remove it from my chart. You can watch that part one more time. Okay? So I'm going to the 50-minute chart one more time because my analysis start from the 50-minute chart. Now this fair value gap, I'm gonna use this one until here because market didn't. Here is my huge 50-minute fair value gap. See, this is my huge 50-minute fair value gap, but as I have this fair value gap, I'm gonna use this one. But if you want to use this 50-minute fair value gap as well, it's perfect. There is nothing wrong with that. But here this one is not huge, this is obvious, so I'm gonna use this one. Now I'm going to mark the New York AM session, right? So New York AM session start from 9:30. So why is that? There is 9:30 and until the 12. So this is the New York, what to say, I mean the AM session. Now I will keep it over there like that way. As market never reach over there, I can actually remove it from my chart. So I don't need that one. So over here inside this price action, when price is just here, right? This is the first candle from the New York AM session. What do you see? What do you have? First thing first, you can see this clean buy side liquidity. You have this clean buy side liquidity. Why this is buy side liquidity? Because this is all relatively equal highs. At the same time, you can see this clean sell side liquidity. So from here and this too low, okay, this too low before 9:30, this too low is your relatively equal lows. So I'm gonna mark it as my sell side liquidity. What do you have? You have sell side liquidity, you have buy side liquidity, right? Now where market will go, this is 9:30. So around just before 9:30 price is over here. Do you know where market is going? Is it going higher or is it going lower? Now in this type of situation, I have these two fair value gap. This is the last fair value gap from 15-minute chart. This is the entry gap from the 15-minute chart, right? Price is over here. So if you are thinking price is over here, if you are thinking market is going higher, it has to reach to that fair value gap, entry fair value gap, because there is no other 15-minute fair value gap. Can you see? There is no other 15-minute fair value gap or obvious fair value gap. So it has to reach over there. Now if it would love to go lower first, to take that sell side liquidity, then you will look for a fair value gap over here. So I can say here is fair value gap from 15-minute chart here, just here. So this is a 50-minute fair value gap. Around that area, this is the entry fair value gap. I have the last fair value gap over here, so I'm going to mark that last fair value gap as well. So this is the last fair value gap from 15-minute chart. So I'm going to mark it over here. So I'm now going to 1-minute chart and I will see if I can have any opportunity to take sell. Now over here in 1-minute chart, this is that 15-minute last fair value gap. Okay, around 9:30, that should be your first entry after 9:30. Okay, but as I showed you to the live streaming, when price came here to the 50-minute fair value gap for the first time, then I got that market structure shift over there. Okay, so that was the market structure shift. There was the fair value gap over here. I'll mark the fair value gap as well. So here, this is that fair value gap, and here this is the entry fair value gap, and there is the breakaway gap. Just above that fair value gap, this is the breakaway gap. Now around 9:30, there will be some volatility. Always, you will always expect some volatility. So this entry I'm not suggesting you to take, but I pushed my button over there, and you can see over here your stop loss has to be just above that candle. I mean above, see this candle, you have to put your stop loss over there, and your target will be that sell side liquidity. Remember this sell side liquidity from 15-minute chart, this is that sell side liquidity. Okay, and you can see how beautifully it worked over there. So if you want to take that entry, you can take, but I'm not recommending to you to take that entry, because before 9:30 or around 9:30 there will be much more volatility. You will be chopped up. Most of the time you will be chopped up. So I'm not suggesting you to take that entry. So I'm gonna remove this, and that whole setup I'm not liking it. So around 9:30 market went lower. Where did it go? It went to that entry fair value gap from 15-minute chart. Remember, this is that entry fair value gap from 15-minute chart. So when market came here to that 15-minute entry fair value gap, market has taken the liquidity. You will look for a market structure shift over here. Do you see any market structure shift over here? No. Market just went higher and it has taken some highs over there and came to this 15-minute last fair value gap one more time, right? So after reaching over here, when price came here to that 15, are you willing to take sell from there? No, I'm not willing to take sell, because the sell side liquidity has already taken. All I have this buy side liquidity. See this buy side liquidity, I have only this buy side liquidity, and this 15-minute fair value gap has done its job already. I don't have any other sell side liquidity. Though there was a setup, I guess market structure shift, fair value gap, price came to this fair value gap, finally it went lower one more time. But I'm not willing to take that sell. I will wait. I will wait for the buy setup, right? So market come here to that 15-minute last fair value gap, went lower one more time, take those lows here. It has been taken. Now I will look for a market structure shift for the buy side again. Why? Because this is the entry fair value gap from 15-minute chart. I have clean buy side liquidity over there. So over here I can see this is the market structure shift. There is the market structure shift, and I have this fair value gap. Okay, so this is the fair value gap over here and that area. The same thing, guys. You have to look for the higher time frame fair value gap, and you have to look for the liquidity. And I'm going to remove that liquidity level from my chart because it's taken over here, right? So that should be your entry over here, and that should be your entry. Your stop loss has to be below that low. Look at this low, it has to be below that low, and you will look for that buy side liquidity. That buy side liquidity. At the same time, you have to take the partial or something, everything you know better. But here you can see this is 30 handle. So this is a huge stop loss. So even if you would love to take that entry, your stop loss has to be below that candle, that bear candle. Okay, you have to put your stop loss below that candle. In that type of situation, maybe it happens, it doesn't happen all the time, but sometimes it happens. Okay, you will be stopped out over here, so it doesn't matter. You got stopped out here, it doesn't matter. Look, price came here, failed to take that low, come back again to that fair value gap. When it come back again to that fair value gap, you will take re-entry around that area. So you just think, here you got stopped out, you took re-entry over there, your stop loss will be at the same level, where just below that body or that candle. If you are willing to put it just below that candle, it's also okay, because this is the order block. It should work as a order block, so you can put it over there and your target will be that buy side liquidity. That will be your target. Now it's near about 138 handle. You don't need to go over there. Better you will look for some very near buy side liquidity. So I can see this high and that high. Okay, they're relatively equal highs. So this is also the buy side liquidity. So you can say here, so that is the buy side. You can target that buy side liquidity, or maybe you can look for that buy side liquidity. This high has taken by that high, right? So this is the shallow run. Shallow run is obvious liquidity. So you can actually target over here. Still now it's near about 82 handle, right? It's clean 82 handle. It's not a small man. You got stopped out here for maybe 10 to 15 handle, or maybe, yeah, something like that. But you are going to get that 82 handle. If you know where you are going, then one stopped out is not going to stop you, okay? And if you just look for the setup, wait until it reach in a level, then if you look for the setup, trust me man, you are going to be profitable. So that is the morning session entry. I would love to stay with this entry to the morning session, okay? And if you see actually price, where did it came, you already know that. I mean, I explained that so many times over here. Let me mark it. This is that 1 minute last fair value gap over here. So price came here to that 1 minute last fair value gap. Look over here. Then price went higher. Where did it go? To that 1 minute last fair value gap over here. I explained everything in my life. So this is that 1 minute last fair value gap. Price came here. Then price went lower again. Here there is another 1 minute last fair value gap around that area. So I'm going to mark that on as well. You can see over here to here. So this is the 1 minute last fair value gap. Price came back again to that 1 minute last fair value gap, and price came here finally to that 15 minute last fair value gap. Now I'm going to the New York PM session. I'm trying to make this smaller so that you don't get bored. So over here, I'm going to remove all of this label from my chart. New York AM session and New York PM session. Sorry, London session and the New York PM session has done. AM session has done. Now I'm going for the New York PM session. So from here, 1. So from 1 to 4, this is New York PM session. So you can see market was here. What do you have? What do you have? What do you see? You have clean buy side liquidity. Do you have any sell side liquidity? No, you don't have any sell side liquidity. Now, if market would love to go higher, it has to trade a 15-minute fair value gap. Now, where is your 15-minute fair value gap? Over here. Without this fair value gap, you don't have any other 15-minute fair value gap over here. Okay, so this is the consolidation, the accumulation day over here. So you have to understand the fact. At the same time, just below that buy side liquidity, where is your 15-minute last fair value gap? I'm going for that 15-minute last fair value gap below that buy side liquidity. Okay? So this is that 15-minute fair value gap. There is no other fair value gap above that fair value gap below that buy side liquidity. So that is that 15-minute last fair value gap, and over here I don't have any fair value gap from 15-minute chart. No fair value gap from 15-minute chart except this one, this entry fair value gap, but it has traded over here. One more time over here. So where is my New York? Here. Okay, so this is the PM session. I'm going to 1 minute chart. Just remember there is the 15-minute last fair value gap. I will show you something over there. Okay, so if you can see, this is that line. Now at the same time, I don't have any fair value, any liquidity from 1 minute, 15 minute chart. But here from 15 minute chart, 1 minute chart, do you see anything here as your sell side liquidity? Or what do you think about this price action? What it has done? When price come here to that 15 minute last fair value gap, you have to expect a reaction. Always, you have to expect a reaction from the last fair value gap, either 50 minute or the 1 minute. If the last fair value gap reaction is from 1 minute chart, you are not going to frame your trade. But if the reaction you are expecting from 15-minute chart, you will expect a reaction with a frame of your trade. Okay. Now look at the reaction, how it go to that 15-minute last fair value gap and how this candle close. I'm not going for the hammer or I dozy candle or something like that. No, I'm not looking for that. I'm not using that. It just came here. This is the reaction, very nice reaction. So when I saw this reaction, I just simply go for the setup. Here, this is the market structure shift. See this low, when it is shifted, that is my market structure shift. If this is my market structure shift, was there any fair value gap? No, there is no fair value gap. If there is no fair value gap, I will look for the order block. So I will go for that order block. If I'm thinking that market is falling or this is the reaction, if you know this is the last fair value gap and you are going to get a reaction, then you can go for that order block instead of the fair value gap. After getting the market structure sheet, you can go for the order block as well. Now if you are not willing to take that sell, I'm happy with that, because you have already got set up New York AM session, you got a setup to the London session. So New York PM session, it's little difficult, but I took that entry and I have uploaded it to my Twitter, and I go for the standard deviation. So from here to here, that was my standard deviation, normal, so minus 1.5 until here. So that was my closing of my trade, but actually it has traded -2 standard deviation. Okay, so over here what I actually marked, what was my target. If I took my entry over there, to whom I will look for? I will look for the 1 minute last fair value gap, as I don't have any liquidity here. See, I don't have any sell side liquidity here. So I will look for the 1 minute last fair value gap. Where is your 1 minute last fair value gap? There is my 1 minute last fair value gap over here and here. This is my 1 minute last fair value gap. If I would love to take that entry, why? Because from the 50-minute last fair value gap, it was the reaction, market trade there, and very nicely it fall. There was a order block entry. If you get fair value gap, that is perfect. If you have the fair value gap, okay, then it's the perfect thing. Go for that fair value gap. If you don't get the fair value gap and you are expecting a reaction from 50-minute last fair value gap, go for that order block entry. So that is the order block entry. Market went lower, it gave you, it just falling since something like that, then it has traded this area one more time, then it came to that 1 minute last fair value gap. You don't need to reach over here, you can easily come until this area, this low, until here. Okay, so you can take an entry to that order block level. Your stop loss has to cover the last fair value gap. So there is the last fair value gap from 1 minute chart. This is that last fair value gap from 1 minute chart. So your stop loss has to cover the last fair value gap, and you can actually target that relatively equal loss. No, it's not clean relatively equal loss, but yeah, kind of relatively equal loss, as you are expecting some reaction. And this is kind of, just look at the price action. This is the sideways price action. Okay, so depending on that, you can go for that trade. It's not a huge trade, 35 handle, something like that. Yeah, but yeah, that is the New York PM session. It is the price action over here. So guys, in short, this is the recap of Monday. If you think it's not good or I have to add something, please don't feel hesitate to tell me that to the comment box. I need some advice from you so that I can improve the daily recap video. And if you're thinking it's not helping, let me know that as well, okay, so that I can stop to make this video. It's like more than the midnight, so it's near about 2 a.m. at night, and I'm just making this video for you guys. So please let me know if you think it's not helpful. I will stop to make this video, I mean this daily recap video, but you have to tell me that. Okay, so if you're new, you can subscribe to my channel, and don't forget to give me a like, comment below if you have anything to say. Okay, don't feel hesitate. So see you guys, bye bye.